Are you a beginner looking to invest in the stock market to achieve solid returns, but feel overwhelmed by technical terms, numbers, and charts? You're not sure where to begin? Then give me about 10 minutes of your time, and I'll show you the essential steps to get started successfully. First, let's answer the question of how the stock market fundamentally works. On the right, you can see a chart that appears highly volatile, reflecting the occasional irrationality of the market. However, if you take a closer look over a longer period, you'll notice that the chart consistently trends upward. This is because the stock market is a structured system, but its patterns only become clear over time. Let me now show you the key factors that influence this system during different time periods. In the short term, over a period of 1 to 2 years, psychological factors play a dominant role in influencing the stock market. These include breaking news that the market analyzes and then evaluates as either positive or negative. Depending on the evaluation, the chart rises or falls. This applies to both index charts and individual stock charts. In the medium term, over a period of 2 to 5 years, political factors play a crucial role in influencing the stock market. For example, the COVID-19 pandemic led to persistently high inflation in various industrialized nations around the world. In response, central banks steadily raised interest rates until they became restrictive enough to gradually bring inflation under control. Once inflation began to ease, central banks started lowering interest rates to avoid stifling economic growth. If you search for the term interest rates on different news platforms, you'll notice that this topic has repeatedly surfaced as a key issue over the past 3 years. Positive signals of declining inflation regularly led to rising index prices as the market anticipated further rate cuts. On the other hand, reports of persistent or even rising inflation often caused index prices to fall as the market assumed there would either be no further rate cuts or fewer than initially expected. In the long term, the stock market follows the fundamentals of companies. This means that when companies consistently increase their profits and, ideally, even exceed market expectations, their stock prices tend to rise steadily over time. Keep this fact in mind. If you understand these influencing factors, you've already grasped a significant part of how the stock market works in its most essential characteristics. Let's move on to investment strategies. It's important to understand the key strategies available in the stock market and then choose one to focus on and stick with it consistently over time. I'll now briefly introduce you to the 4 most common strategies and then provide a recommendation on which strategy you, as a beginner, should exclusively focus on. First, active stock trading. Short-term buying and selling to profit from price fluctuations. This requires time, experience, and comes, especially for beginners, with a high level of risk. Second, value and growth investing. You invest in individual stocks, focusing either on undervalued companies based on specific criteria value or those with high growth potential growth. Ideally, you can combine both value and growth in a single company. This strategy requires extensive research and patience. Third, quantitative methods. This approach involves the use of complex mathematical models and algorithms. It is more suited for professionals. Fourth, passive investing. With this strategy, you invest in ETFs, exchange-traded funds, which track an entire market in the form of a stock index. Examples include the S&P 500, which focuses exclusively on U.S. companies, or the MSCI World, which includes companies from various countries around the globe. Passive investing should be your preferred strategy as a beginner. ETFs offer numerous advantages, especially when starting out in the stock market, which I will explain in more detail further on. I'll also show you how to choose the right ETFs for your needs and how to invest in them regularly using a neobroker. Now, let's address the question of why ETFs are particularly attractive for beginners. They offer several advantages, and I'll briefly summarize the most important ones here. ETFs are cost-effective and have low fees, especially compared to actively managed funds. You don't need to conduct fundamental analysis or constantly monitor the market. Overall, the research effort required is minimal. They offer broad diversification and therefore effective risk distribution by closely replicating stock indices, which in turn consist of many different companies. You can expect an average gross return of around 7% per year. This allows you to achieve a higher and generally very solid return compared to savings and fixed-term deposit accounts, as well as typically outperforming bonds. Next, I'll list a few important country-specific stock indices so that you've at least heard of them. After that, we'll address the question of how to find suitable ETFs. Let's start with the U.S. indices. First, there's the Dow Jones Industrial Average, which includes 30 U.S. companies primarily known as blue chips, well-established and renowned brands or names. Second, there's the S&P 500, which tracks the 500 largest U.S. companies by market capitalization and is considered one of the most important indicators of the U.S. stock market. Third, we have the NASDAQ 100, an index consisting of 100 U.S. companies primarily focused on technology. Let's now turn to the German stock indices. First, the DAX, with a scope of 40 companies including the largest and most significant publicly traded companies in Germany by market capitalization and trading volume, often considered the German equivalent of the Dow Jones. Second, the MDAX with a scope of 50 companies, focused on medium-sized companies mid-caps that rank directly below the DAX companies. Third, the SDAX with a scope of 70 companies, focused on small-sized companies small caps listed after the MDAX companies, and at least the TechDAX with a scope of 30 companies, focused on technology companies from Germany, which can also be included in the DAX, MDAX, or SDAX. At least a brief overview of Asian stock indices. First, the Nikkei 225, which comprises 225 leading companies listed on the Tokyo Stock Exchange. Second, Hang Seng, which includes 50 of the largest companies listed on the Hong Kong Stock Exchange. Third, Kospi, which comprises the largest companies on the Korea Stock Exchange. That concludes the overview of the indices. Theoretically, you can invest in an ETF for any of the indices shown. In the following, I'll show you how to choose the right ETF for you. To find the right ETF, you can use the website Just ETF. The link is provided in the video description. First, click on ETF Search and then on the Find ETFs button. Next, you can type the index S&P 500 in the search bar at the top. The website will then list corresponding ETFs based on this index. I would simply select the first one at the top. Let's click on it. First, I would recommend clicking on the Basic Information section. Here, you'll find the most important details about the ETF. One thing to look out for is the fund size. It should be in the green range, as shown here. Generally, the more money invested in an ETF, the more stable it tends to be. You should also pay attention to the total expense ratio. Here, it is 0.07%, which is particularly low. Many ETFs have a total expense ratio in the range of 0.2% to 0.4%. Additionally, check when the ETF was launched. I recommend a minimum of 10 years. In this example, it has already been nearly 15 years. Lastly, you should pay attention to how distributions are handled. In this case, it's an accumulating ETF. This means the distributions are not paid out but are directly reinvested into the fund. As a result, the value of your shares increases continuously. This is particularly beneficial for an investment horizon spanning decades. In addition to the S&P 500, you could also add an ETF based on the MSCI World. I'll type that into the search bar here and select the first option again by clicking on it. The MSCI World includes around 1,600 companies from 23 different countries, making it even more diversified than the S&P 500. It should always be a standard position in your portfolio. You can also click on Basic Information here again and then select a suitable ETF based on the previously mentioned criteria. Finally, as the last position, I would recommend adding a dividend ETF. To do this, you can type the keyword dividend into the search bar and select the first option as well. Using Basic Information, you can once again check whether the previously mentioned criteria are met. The significant advantage of such an ETF is that it pays a high dividend and helps stabilize your portfolio, especially during more turbulent market times. Now, let's address the question of how you can invest in the ETFs you've selected. I will show you an example using the NIA broker Trade Republic. We are now on the Trade Republic platform. If you don't already have an account, you can register for free. Once you're logged in, click on Orders at the top. This will bring up the interface you see here. To invest in the ETFs you've selected earlier, I recommend the following steps. Go back to the Just ETF website and locate your chosen ETF using one of the two identification numbers displayed there. Do not rely on the name alone, as you might accidentally mistype and select the wrong ETF. Copy one of the identification numbers, as I'm doing here, return to the Trade Republic platform, and paste the number into the search bar at the top. This number is universally assigned to the ETF. Once entered, the ETF will appear. I'll now click on it, and this overview will open. Here, we can see the ETF's latest price among other details. To start investing, we can set up a savings plan. I click on the Create button. Here, I can select the interval for my investments, for example, monthly. I then click on Next, choose the start of the month as the investment date, set the savings rate, for example, to $150 per month, starting from the beginning of February. I click Next again, check the box here, and then click Create Savings Plan now. Once you do this, the savings plan will be displayed here. You can repeat this process for all other ETFs using the same steps. Just for your notice, you can delete or adjust created savings plans at any time. To conclude this video, I'd like to share a few tips you can follow when investing in ETFs. First, I would recommend keeping your portfolio as simple as possible. This means including around 2 to 3 ETFs in your portfolio. I showed you 3 examples earlier, and with these, you are already well diversified and have a good chance of benefiting from the average market returns. I've seen portfolios with 20 or more ETFs, but that's unnecessary. Additionally, you should automate your savings rate. I showed you earlier how to set this up using the NeoBroker Trade Republic. Make investing a habit. An automated savings plan ensures that you pay yourself first and consistently contribute to your investments every month without fail. Regularly increase your savings rate whenever possible. Don't focus on finding the single best ETF that might give you the last extra % of returns. Instead, concentrate on steadily increasing your savings rate. Over time, this will be a far more effective lever for boosting your returns. Lastly, take a long-term approach when investing in ETFs. This means investing for more than 5 years and contributing regularly through your set savings plan during this period. With that, we've reached the end of this video. I hope you can use the strategy outlined here to start investing successfully in the stock market. Always remember, especially if you're planning over decades, average returns are more than enough to build wealth. As a beginner, avoid getting involved in extremely risky strategies that promise quick, above-average success. Also, don't wait for the perfect time to start. The right time is always now. Start today. I wish you all the best on your wealth-building journey. In the top left, you'll find my video on optimizing your money. If you'd like to learn how to take control of your finances, be sure to check it out. I'll see you in the next video.